and wait for 30 years and that will provide you with an amazing retirement is kind of a ridiculous thing to be sold. But the more I learn about the 401k, just makes me less and less liking it. Is, well, largely people, 92% of the population doesn't know that they pay fees.
Welcome to the Cash Flow Chronicles. I'm your host, Jonny Catani, and the founder of Catani Capital Group. For the last 2 years, I've been studying alternative assets and now help solve the problem of creating passive cash flow for creators, influencers, and busy professionals by bringing you 5 episodes a week of easy to understand education in the world of passive investing. What's up, guys? Welcome to another episode of the Cash Flow Chronicles. I'm your host, Jonny Catani, and I'm joined today by Stephanie Walter. Stephanie, a wealth strategist, capital raiser, syndicator, and author of the new book, Shattering Money Myths, How the Wealthy Invest. She recently retired and sold her insurance agency of 16 years by following the key principles she teaches professionals to use. She teaches professional people to unlearn what most of us have been wired to think about money and re-educating people on attaining lasting wealth. Stephanie lives with her husband and young son in Colorado. Stephanie, welcome to the show.
Thanks so much for having me.
We're grateful to have you and excited to chat today. We're going to get along great. And I'm really excited for this conversation because this is the exact thing that, even younger people, millennials like myself, are still guilty of these kind of older myths, as you call them. And I am on the path to try to help them kind of break those as well. So I'm excited to hear from you. First, though, let's kind of go back. Give us kind of a short story of, what's kind of led you to where you're at and when you kind of discovered these were all myths and shattered them for yourself.
Yeah, well, I started like most people, got out of college, got a W-2 job, worked at that for a few years and realized, I got brought in and my bosses talked to me about giving me a 2% raise. And that was the best raise, that the company had to give. And I just bought my house and I went to go talk to my dad, who's definitely my largest mentor. He was an entrepreneur. And I just said, Dad, they're giving me a 2% raise. If I make a 2% raise the rest of my life, this is really depressing. And he was just like, well, if you continue to work where you are for a person or a corporation, they put it out on the table what you're going to get. But if you want to work for yourself or start a company, what you achieve is basically up to you. And so I gave my notice 2 weeks later and started an insurance agency that I ran for 16 years. I always liked real estate. I didn't really know much about what I was doing, but it was hard to go wrong during the time I bought, which was like right after the crash in 07, 08, 09 in the Denver metro area where the growth has been kind of insane. But still hadn't really changed my mentality about money. I thought I'd just buy these rental properties, buy them and hold them, and wait until they're paid off and then I could retire. And that was really my strategy. And I was invited to a boot camp to learn about investing in syndicated real estate or, apartments, basically. And that's when I first heard that concept of syndication, which is everybody, coming together to buy something bigger than anyone could do on their own. I was kind of sold at that point. I became a capital raiser. That's largely, raising money for these deals. And in the course of doing that, I interacted and became friends with a lot of really wealthy people. And I looked at their financial records and noticed that they just do things differently than I did. I couldn't figure it out really for a while. It took a while to put it all together. But yes, I started noticing this and I changed the way I was looking at money. I repositioned my money. And within the next 3 years, I had replaced my income as a business owner and I could retire. But, retiring for me really is about helping other people learn what I did, what I learned.
That's awesome. I love that so much. Yeah, syndications are very, very powerful. Obviously been around for a little while, but still newer, right? Not a lot of people know them, understand them. It can kind of be one of those like trigger words where people, get all hesitant. So let's kind of get into some of these kind of myths and things, because I'm really curious and want to learn as well. So what are some of the myths you kind of talk about in the book that you kind of learned as you went on?
Well, I think a big myth, well, to start with mindset, because really that's where there's no change that can come, is what I'm learning when I talk to people if they don't have a mindset change. And the largest mindset change is we're all pretty much programmed to be in an accumulation mindset, which just means that whether we're buying real estate or we're investing in our 401k, we put our money in there, we possibly give the control, most likely give the control to a financial planner, and just let the money sit and accumulate. And it's doing nothing for us at that time. Then we retire, and then hopefully we've saved enough money to have a comfortable retirement. But all the while, that money is out of our control. We don't really know what it's doing. And that's a big problem. Whereas the wealthy people, they look at money, I call it utilization. So they are using their money. Their money really, if you want to look at it in a bigger picture, they view their money as their employee. Their employee is working for them and doing stuff for them. So really they're questioning and being sure that their money is producing for them at any and all times, sometimes and at several places at the same time. And that's a big difference. And so, yeah, that's the first myth I'd say to get a mindset of a wealthy person.
I love that so much. I mean, it's so important, really, because what I tell people, and not everybody, right, can jump into a syndication at 25 or 50 or however much, right? But if you can't invest $100 or $1,000, let's just even say into the stock market, then you're definitely not going to be able to invest $50,000 into a syndication, right? So I love that you start with the mindset and kind of helping people understand that money is a tool and it's used to work for you. I love that. Money is an employee. That's so great.
Yeah.
So as we kind of move forward, right, we've gotten into the mindset. What are some of these other, important things to kind of pay attention to?
I think the biggest one the one I'm thinking of, I suppose, if your audience is younger, is to really question the 401k and to really, because the 401k was just a pretty new construct. It was in the early 80s. It was never meant to be everybody's sole retirement, though that's what it's become. But just logically thinking that you're supposed to save 3% of your income and wait for 30 years and that will provide you with an amazing retirement is kind of a ridiculous thing to be sold. But the more I learn about the 401k, just makes me less and less liking it. Is, well, largely people, 92% of the population doesn't know that they pay fees out of their 401k. And those fees are pretty, they're very significant. As we've all heard that compounding interest is the largest miracle, or I always get that quote mixed up with Albert Einstein. But the thing is these fees are compounding too. So if you can't get out of your 401k, you should at least really look at putting your money into an index fund with low fees, because again, it's over 90% of the money managers don't beat the index anyway. So I would say if you're in a 401k, reduce your fees as much as possible, because those fees, literally a 1% fee could mean that you have to work 10 more years. it's pretty astounding with that. But a good myth that I think I hear a lot of people are like, well, the wealthy are just wealthy because they invest in high risk instruments. Well, there's nothing further from the truth. The wealthy people I know are super concerned with loss, and what they're interested in is actually asymmetrical return, which just means the return that they get is not at all proportional to the results of that investment. And and so I find that they invest in very low risk opportunities. And that's, again, is what we're sold. When you're young and you go into a financial planner and they ask you, well, how much risk are you willing to take on? The higher risk to them equals higher returns, which is not, I don't think, is a healthy way to look at it.
I completely agree. I love that. So I pulled up the quote. He says, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it, which is literally what you said, right?
Yeah, exactly. And that's the sad thing, is because this whole 401k experiment has gotten a bit corrupted because there's a lot of money up for grabs, and a lot of financial institutions are taking the money, with fees and things like that. So you need to be hyper vigilant, because this is your money, and be sure that, you do understand what fees you're being charged and that sort of thing.
Absolutely. And one thing that's happening kind of in my day and age is, no longer are people staying at one job for 20, 30 years, right? It's very common, especially in the tech space, 2 years, right? 3 years maybe, and then you move to the next one, And so what ends up happening is you compile these like different 401ks and all of these things, and, people kind of lose track. So what are some ways, instead of a 401k, or let's say, maybe you don't want to contribute as much or at all, what are some other ways to put our money to work for us that we have more control over? Because despite what you think with, employers get you with the 401k match and everything, and it sounds great, but you have no control. You pick like one of three things, and you don't even know what your money is really doing for you. Meanwhile, you look at the wealthy, and they're investing in these syndications and different opportunities where they have complete control because they know everything that's happening. What are some different ways aside from the 401k?
Yeah, the 401k for sure. If I had one that is, with an old employer, I would put that into a self-directed IRA. And that's really easy to do. You basically just find a self-directed IRA custodian, and you roll it over. And what that means is you can use that money. So say you have $50,000, you could use that money to invest in a syndication. And the thing about the syndication is you can vet that much better than, say, what your money's sitting in a bunch of mutual funds. There's probably a couple hundred companies. I would gather you probably don't know anything about any of these companies, what their vision is, what, their strategy. So nonetheless, you could go into a real estate syndication. You could meet the people that are running the deal. You could see their track record. You could see the property, the tangible physical property, and what their plans are for it. And then, just keep doing that, I think, is a great strategy. But there are many other strategies that the wealthy people, they tend to engineer their wealth, and they use products in which they can engineer their wealth. And they're looking at the tax ramifications on everything they invest in. And I know, if your audience is as young as you, people aren't thinking about tax rates, when they retire, but it's very, certain, I would say, that tax rates are going to be much higher when you retire than they are right now. So what I see wealthy people doing is they get into these construct of a life policy, which is, that turns people off. But really, you just think of it, that's really the container. And to put the money into the container with a wealth strategist, someone that knows how to build this, is you're able to put money into it and it's able to grow tax-free, and you're able to get the benefits of it when you retire, like a 401k, tax-free as well. And just from it being in that container, it overperforms a 401k probably 3 to 1. It's pretty amazing. And there's other strategies too that another one that most people have never heard of is a premium financed insurance policy. So that's basically leveraging a bank to contribute to your, let's say, retirement. So you have a bank, and the bank puts money into this policy. You put in, say, 20%, the bank puts in the other 80%, and that money grows. So you sit on it for 20 years, and the bank has basically contributed to your retirement in this product. It's very advanced wealth building strategies, but again, they're things that people don't hear about. We hear about
I don't think I've ever heard of this.
401k, and we hear about you put your money in the 401k, wait, and then retire. And there's so many other ways of using, and I find that the wealthy like to, they know what they want. They know what they want in their end result, and they reverse engineer how to get there. And they use things to get them where they want to go, which is very opposite of what most people do.
Absolutely. Yeah, you made so many great points there. We've had a few guests on the show who have talked about the whole life and kind of that whole concept, even getting into the infinite banking and bank on yourself concept, which you touched on. Have not heard of this other banking, the actual bank product, though. That's fascinating.
Yeah, I'm actually not talking about whole life because whole life is not, I mean, certainly that's a good strategy, but this strategy that I'm talking about with life insurance is utilized by the very wealthy and performs heads and tails better than the whole life strategy does.
Wow.
So, yeah. So it's very specific. It's a shame, there isn't more knowledge out there about these products, but I find it the same as syndications, because syndications only became available to the general public in 2012. Prior to that, I couldn't approach, or I couldn't be on a podcast talking about syndications. I had to, talk to my existing group of friends about these products because it wasn't allowed. The law changed in 2012. So I feel like as these things are becoming more well-known, there's more information out there. And now these more advanced products are slowly trickling down and people are learning about them as well. Yeah.
Yeah, absolutely. That's a really great point. And also we are going up against Wall Street, because they don't make money off private placement syndications, these banking products and these life insurance policies, right? They want you in that 401k and that mutual fund. And I love the point you made about, you don't know what they're doing. I talk about this all the time as a former stockbroker where, never did I get a call from a client who wanted me to get in touch with a fund manager, right? A Wall Street fund manager. Yet when you're investing in a syndication, you can call up the CEO or the principal of the company, the lead sponsor, lead operator, and go to lunch with them. Even if you wanted, go to the office and visit and shake their hand and meet the team. And you talked about the vetting process, which I talk about all the time. And, so many people confuse liquidity with control, but control is actually predictability. And when you can look at, data and people and understand that, that's the actual control. And
Correct.
that's why the wealthy are getting wealthy, because they understand that concept. So I love
Yeah.
that you brought that up.
No, that's a great point. I just had someone email me right before we got on a call, and they're an investor and they're going to be in the area where there's the property. Can one of my partners meet them? Yes, absolutely. And that is the point. And it is taking control of your money, and knowing what your money is being invested in is a huge thing.
Absolutely. So one key to gaining wealth, which I also, we kind of live in the era of right now, especially like my generations and the generations coming up, right? But wealth is not created right now. Wealth is not created day trading or, getting rich on crypto. It takes time. What are some ways? What's a good approach to, you mentioned kind of the reverse engineering. So what's a good, like, what I'm trying to help people understand is that goal, that future, kind of understanding your risk tolerance. What's a good way that we can sit down and, okay, what do I want in 10, 15, 20 years? And then actually do the reverse engineering.
Yeah, I mean, I think that's a great way. How much do you want when you retire? And what is that you want to achieve? And also, what I think what a lot of people miss in that planning session is, what are the taxes going to be? What kind of tax plan do I have? Because $100,000, if they're right now, the highest tax rate, I don't know, is 38, 39. Then if you're in a state, it could possibly be 50%. So if you have 100,000 that you're planning to get out of your 401k, and the taxes take 50% of it, that's certainly not what you were envisioning. And so I believe very much that there needs to be some buckets that, you have money in. And one of those buckets is definitely tax-free income. And if you are young enough, you can make plans with, not a lot of contributing money into a product like this, like what I'm talking about. And it performs, since you have the benefit, because the average person I work with is 50. And so if you're a person that's 35, 25, even, you've got time on your side. So you've got a lot more options, and these products that are designed for the wealthy will probably outperform what you could have even considered that you wanted as a result.
Yeah, absolutely. I love that so much. There's a huge difference between, we all have to pay taxes, right? But there's such a thing as tax strategy, and understanding, a big, I think, misconception is that so many people go to their CPA or even, and say, how do I save money right now?
Mm-hmm.
Right. But in reality, that's a different strategy than, hey, I want to make it so that in 10, 20 years, my tax burden is even less. That may require a little bit, more upfront in terms of, the tax burden, but later down the road, it's going to be so much lighter. So when you go to retirement and maybe your income isn't as much, but now you're keeping more. So in reality, it actually is.
Yeah, I agree. I think that I think I heard this, someone said this, is, your CPA is very focused on what happened last year, when they meet with you and talk about taxes and stuff like that. Your financial planner's like, oh, just keep contributing, and they don't really have a plan for taxes. So very few people talk to someone to give them a tax strategy, for when they retire, or even, at any point in your life. I think that's what sets the wealthy people apart, is that when they look at these let's say a syndication, they look at what sort of tax benefits can I get out of this? They're always a couple steps ahead. And because taxes are the largest eroder of wealth that there is. And so you need to have a strategy on how to address it.
Absolutely. I love that so much. Yeah, there's so many tools available, particularly in real estate, that really lend well to writing the tax code, to really widen that tax burden, and the wealthy understand that. And once you get rolling, especially with these syndications, it's very common to, one goes full cycle, boom, you move it to another one that reduces that tax, and so on and so forth. So, well, Stephanie, this has been absolutely amazing. Absolutely love this insight. I knew that we were going to connect really well on this, because this is what I'm trying to get young people to understand. So I appreciate you coming on.
Thank you.
We'll wind down and jump to the final 5 here. First question, best advice you've gotten from a mentor?
Best advice I've gotten from a mentor was from my dad, that story I mentioned, of that working on your own, your returns are limitless when you work for yourself.
Absolutely. I love that.
Yeah.
What is it about your career that makes you feel like you're fulfilling your why?
I feel like I'm fulfilling my why now because I am pretty much retired, but I get to talk about what I love, which is empowering people with their finances. And that's what I love.
Absolutely. Love that so much. Favorite non-real estate or investment related book?
I love my book, but I also love Killing Sacred Cows. That's definitely a mindset book about money, wealthy people mindset about money, because it really does, when you come right down to it, people's resistance to new things has to do with the mindset, and how did we get these mindsets,
Absolutely. I love that. Added that to the list for sure. If you could have any superpower, what would it be?
Superpower. Oh my gosh. I guess, boy, that's a tough one. I guess being able to travel quickly from place to place. Because I was just in Florida and we were driving all through the state of Florida looking at all of our properties, and that was hell. I mean, we went from Fort Lauderdale to Tallahassee.
Oh my
Orlando.
gosh.
In one day, we went to Fort Lauderdale to Tallahassee. That was 14 hours in the car. So I was like, next time, can we just charter a plane or a jet or something?
Seriously, holy cow.
That's a long, yeah. So I would say quick traveling would be up there on the list for me.
I'm right there with you. I'm right there with you. As much as I do enjoy, as much as I love traveling, if I could just snap my fingers and be to the next place, oh, that would be so great.
Yeah.
Awesome. Well, last one. What's the best way for people to get a hold of you and learn more?
You can go to my website, which is www.erbewealth.com. And I said, for your audience, I have a button there that just says you can click to get a copy of my book on that page. And I'm happy to mail you one, or you can download a free copy. It's a pretty short read. It's about 140 pages. But I think if you read it, you'll know probably more than, well, you will know more than any financial planner out there.
Isn't it fascinating?
Yeah.
All these letters next to their name, and they're really just there to collect their fees. But no offense to any financial planners or advisors out there. We do love you, but
yeah. I was
awesome.
one too. I was the Series 6. I had my Series 6 and 7 for a period of time when I was in insurance, and realized very quickly I didn't know what I was doing, but did anyone else?
It is true. The more you get in there, the more you're like, does anyone know what they're talking about?
Yeah.
That's funny. Well, Stephanie, again, thank you so much. It's been absolutely incredible. I really appreciate your time.
Well, thanks for having me.
Absolutely. Thank you again for tuning in. Who do you know that wants more cash flow? Share this episode with them so you can grow your cash flow together. If you enjoyed the show, make sure you're subscribed on your platform of choice so you never miss a new episode. Go to KataniCapitalGroup.com to learn more.